Welcome back. The first trading day of the second quarter kicks off with fresh concerns over tariffs. Take a look at futures, indicating a decline at the start of trading this morning, down about 50 points. This is off of the lows of the morning, but it has to do with China this morning announcing those plans to impose $3 billion in import taxes on over 100 American products, from pork to steel pipes. Joining us right now is Crossmark Global Investments Portfolio Manager Victoria Fernandez. Victoria, good to see you. Thanks so much for joining us.
My pleasure. Good morning.
It was a tough first quarter, right? What are you expecting in the second quarter? Tell us what you think drives stocks.
Yeah, I think we have to really look at some of the fundamentals, some of these economic numbers we're going to be seeing coming out in the new quarter. We have consumer spending. That was a big push in the fourth quarter, probably not so much in the first quarter. But let's see now that we have tax reform coming through, some extra cash hitting people's paychecks, if that will start to pick up again in the second quarter. You obviously have the tariff issue that you're going to have to kind of bake in to see how that's going to affect people. But corporate profits should be better. We've got repatriation coming. So you have a lot of factors building in that are going to be tailwinds for the economy. And so we actually think we're going to see things improve. But the monkey wrench in the whole thing is that it's a midterm election year. So you always have to factor that in, because we normally have a pullback during midterm elections.
You know, one of the things that I'm hearing from investors is that this volatility, obviously volatility is always unsettling, but it seems to be extra reactive. It seems like on a day the president can tweet and the markets are going crazy. Understand that political issues always impact the markets, but does this seem to be more than usual?
Yeah, you know, the volatility was so low through 2017, and I think people really got used to that. You had the easy money there from the Fed and other central banks, and there just wasn't a lot of movement going on in the markets, and so they got used to that. And now all of a sudden we're starting to get back a little more on the normal side of things, where we do have the market moving, and there's these large swings from that. People, I think, have forgotten how the volatility really should be in the marketplace. But investors should really use that to their advantage, whether it's a headline coming from politics or whether it's an economic number. Use that volatility to tweak your portfolios.
You know, there's also a lot of debt in the market. We want to turn to the bond market because, according to several reports, the Treasury is going to be starting to meet with banks and brokers this week to talk about how to enhance transparency for government and the bond market. There's a lot of debt coming to the market this week. Let's see. The Journal is reporting that you got high levels of BBB debt fueling fears of a shakeout in the lowest investment grade bonds. Here's what BlackRock's global chief investment officer of fixed income, Rick Reeder, told me about the debt supply on Friday.
And part of what's driven short-term rates is we're pumping so many Treasury bills. We're going to do bills. We're going to do 2 years, 3 years, 5 years. It's a lot of debt. For the next 3 years, $1 trillion of additional net debt that has to be funded by the marketplace. It's a lot. It's what will push, you know, inflation is not scary. It's what's going to push rates moderately higher.
Victoria, do you think that debt gets absorbed? What's your take, or does that pressure markets?
I think there's going to be a little bit of pressure because it should be, it's not something that's going to be temporary, right? We're going to see this for a while because of the new fiscal spending bill that's coming out.
Right.
We've got $90 billion in T-bills coming today, 3 month and 6 months. So I think it'll be very interesting to look and see how those auctions do. If we see a lot of demand, then maybe that sets us up a little bit better going forward. But I do think one of the good things that we're seeing is that credit spreads are not getting hit to the extent that you might expect with so much debt coming into the market. So that's a positive for us, especially on the investment grade and on the high yield side.
We got a GDP that was pretty good last week, Jason, 2.9% growth, and we're expecting S&P 500 corporate earnings to be up 16.5% in the first quarter. But did things slow down a little, do you think, from the peak of anticipating of the tax plan? Because the growth numbers were back and forth in the last quarter.
You know, you hear some reports that some people aren't seeing the benefit of this. But, you know, when we start to continue, you know, people have to file those tax returns here coming up and they're going to be wondering.
Do you think there's a long runway?
I do think there is a long runway because that's reflective of last year, and people won't feel that full impact until they, you know, goes out through the months ahead.
So you think things will get better then?
Oh yeah, I'm really curious about what she thinks about the repatriation. How, you know, is that sudden money coming in? Is that flattened out? That's a lot of money that could come back to the United States and infused into the economy.
Victoria?
Yeah. Yes, there is. It's going to be quite a bit coming back in. And, You know, I don't think a lot of that has actually been baked into the market. When tax reform was first announced, you know, this was something that was set further out on the calendar to occur, and we haven't really seen that come back yet. And yes, people are talking about how a lot of that money can be used for buybacks, but I also think we're going to see a lot of that go into CapEx, and we really need that CapEx infusion. That's going to push productivity, that's going to help wages, it supports manufacturing. So I'm actually looking forward to when we start to see those funds come back in and how that those funds get deployed.
What sectors do you like here, Victoria? How are you allocating capital?
Sure. So we're actually, we really like the financials. They've taken a little bit of a hit lately, but there's still a lot of tailwinds to financials. The volatility helps with trading revenue, higher rates, even though we had a little pullback, but the higher rates help them. Deregulation will help them. So there's a lot of tailwinds to financials, and we like those.
Okay.
And we're just looking at some areas that have taken a little bit of a hit. Retail is one as well that we're looking at.
Financials, by the way, begin reporting earnings April 13th. So that's certainly going to be one of the drivers for this market. Victoria, good to see you. Thanks so much.
Thanks, Maria.
Victoria Fernandez joining us there.